Good evening traders, it's Simon here with the weekly review of Aussie dollar, pound yen and euro dollar. So first off, towards the end of the year in December we decided not to do a video. The market just was not moving one bit whatsoever. It was getting a bit boring, tedious of doing the same thing over and over again. And what we've had now over the last couple of weeks, we've actually had a breakdown to the downside of this upward sloping trend on here that's been tested and respected since April of 2018. So we had a breakdown there, and it looks like we're coming back up for a retest of 97-ish area. So if you look now on the daily chart, we can see we broke down nicely. Daily 15 broke down, we broke our upward sloping trend line, and now although we had a bullish engulfing candle to the upside, we have actually started putting lower lows and lower highs in on the lower time frame. So when you look at the 4-hour chart, what we can see here, we tested 96, we bounced off that quite viciously at the moment, and we're going back up to 97. So we get to 97, I'll be looking to see what it actually does. You might find that a euro dollar short may come up around if you see this actually form a nice pattern here. So this is what I'm looking for now, a good value entry here, and this is where I would like to short the US dollar. You can get something like this here. You could go back to the daily chart, and we definitely target 94. Because obviously when we look at the higher time frame, 94 again is the key weekly level. That's how I see it as. So we'll just put 94 in there, and you should see a very, very nice risk to reward ratio trade there. That's a 4% trade. Personally myself, you can probably cut that quite short now as well and get a nice 8% trade there. This is where I feel now the dollar will actually break down now once it retests this 97 area. So how does that affect the market across the Australian dollar now? So the Aussie dollar at the moment did drop down to 0.7. Like we did say we'd like to see it happening, but at the moment there is no trade there at the moment. I know it's all just come down and just kind of stop there on the daily chart. Again, it may chop for a little bit. There is no reversal signal at the moment, so the Australian dollar clearly is a very weak currency at the moment, and to be quite honest, you can probably pair that with other pairs to actually short against. So you could go gold Aussie long, for example. That would present you a nice trade as well. Just to give you some ideas there. So for this week at the moment, for me to go long in this market, I do need to see some structure here on the lower time frames of 0.7. When you come down to the lower time frame, to be quite honest, there's nothing really there. I mean, you're scraping the barrel. I'll put this down with sloping trend just to kind of like show the scrape of the barrel there. I don't think it's the greatest thing in the world. You haven't really got any proper bullish MACD divergence. I suppose over the long term, you have got a bit there, but it's not what I'd call the greatest in the world. So just be careful and wary that the Aussie dollar is going to do that. Wait for some structure to come in place first of all. Notice how it's all lower highs, lower lows, lower higher, lower low, lower higher, lower low, chop, lower low again. Has not changed trend whatsoever. So just bear that in mind before if you do go long on this pair. Now, euro dollar, we had a nice breakout of the daily 50 EMA to the upside. We've got this little high test here, and then we broke down again quite viciously there. Now myself personally, I think we're headed towards 1.13. That would line up with the upward sloping trend of the ultra lows there, the key level of 1.13, and as you can see, we can zoom out, it's been there in the past as well. So for me, I quite like that. We've still got this bullish MACD divergence overall we have, so that's still in play. The weekly chart at the moment doesn't give me too much, but we still got this bullish RSI divergence sitting in play, and I still think we need to move back up to the 1.185 area to give us some value before we do actually short the next leg down. So that's what I'm looking for here. Again, on the lower time frames of euro dollar, we'll look at the 1.13 area to show you exactly what we've got our eyes on here. Now there's your 1.13 area. We had this upward sloping trend line which was kind of being disrespected a couple of times there. So this area around here, I'm just going to draw it in for you. Something around there, that would be my area of interest, where if we get some good rejection candles there, I'll most likely happily take that trade. Notice how the volume though now on this candle is small. The candle is a bearish engulfing candle, but it's smaller than the one before. The volume is quite higher, so it means the market is now going to start decelerating around this area here. That's what I'll be expecting to see in the next couple of days. And you can see the 1.13 area here on the 4-hour chart has been strong in this area here, respecting it. So that's what I'm looking for there, and I'll sit my hands and wait for the trade come to me. I'd happily take a long position there, something maybe like this. You got that there. You have a nice little stop below these two lows here. You can target the recent highs of this range for 2%, or if you do believe it, go to 1.185. You've got maybe an 8% trade there, as we kind of expected on the DXY. So that does come into line what I'm looking for there. It's not a bad stop at all. You've got some good structure there. That's a pop out and come back up. You notice how it's respected 1, 2, 3, 4 times in this little box there. So stop below the box. That'd be a nice little trade if it comes along. Now the pound yen, so the pound yen has moved quite significantly to the downside, and I will do a proper review on this in another video, as this has now broken down the 140 level quite nicely. It has. So what we're looking for now, really, for me, I'd want to see a move back up to test the 140 area, to see if we can get a little mini trade there going. I haven't got much below here because it's all quite choppy here at the moment. So when I do my full yearly review on this pair, you'll see the most up-to-date situation I'm looking for there at the moment, and we get some decent levels there to come into play. Now, myself personally, I don't feel there's much of a trade here, really, in all fairness. I mean, if you want to put your levels in, you're going to look at 135, 136 area roughly, but again, it's not the greatest in the world, so I will just for the moment leave this now. It's moved, if you see it, it's moved quite significantly down over the past 3 months or so, the last quarter of 2018. Partly is because gold's actually rallied as well, and the yen's a safe haven, so that's one thing you've seen there as well. So we're not really too shocked the yen powering up at the moment, and obviously the pound itself has been weaker with Brexit, so that's why it's a bit of a toxic pair to trade at the moment. Okay guys, I'll just do a little quick on Bitcoin as well, because I haven't seen Bitcoin for several weeks. What do we have here? We have the Bitcoin, not much. It's come down, chopped around, done nothing. It hasn't broke the daily 50 EMA. It hasn't put nothing of any great structure in. You could probably say there's a head and shoulder pattern there. So we could probably draw the 2 lines, something like that we could draw. A break above that would kind of signify a move to the upside, but the problem is with that though, daily 50 EMA is in the way as well. So I don't like Bitcoin at all, not a fan of it, would like a better pattern than that really. The lower time frame will show you that, but trend to daily 50 has been proven in this area here to actually be of a concern. Okay guys, Happy New Year, and we'll speak to you soon. Take care.